Hey guys, what is up? Faz here. In this video, I will be teaching you a very easy ICT/SMC trading strategy. So let's get started. All right, so I hope by now you know what is ABC pattern and ABCD pattern, okay? So if you're not, if you're watching this video for the very first time, and if you are on the channel for the very first time, let me explain it very quickly. So ABC is basically a leg or a trend in one direction. Then the B leg is the trend in opposite direction, and the C leg is the trend in the same direction as before. Let me just quit Discord and okay. So we have A, B, C, right? And then we look for a shift in market structure below the high of A leg, which is right here. You would not look for a shift in market structure here, but here, okay? It should break structure below the range, which is the high. It should break structure below the A leg high. So we have A, B, C. C is the liquidity sweep. And after that, you look for shift in market structure and take your entry from the fair value gap. Similarly, ABCD is when you have A, B, C, and then you have D. Okay, and the D leg takes out the low of B leg. So you have A, B, C, D. Okay, and once you have that, you look for a shift in market structure, right? And you take your entry and boom. So this is ABC and this is ABCD. Same goes for long positions or long setups. So you know that ABC and ABCD work, okay? A lot of people have tried them and they do work. But how do we improve that? How do we get our win rate to increase even further? So on my YouTube channel, I have taught you some entry patterns. So we have turtle soup pattern, and we also have this pattern right here. Okay, so you have a POI, right? So you must have A, B, C, something like that, and you know, a pattern like this. We're going to use these entry patterns in our ABC, and we're also going to use confirmation entries. So let's get started. Let me remove this and this. Okay, so the very first rule right here now is that you look for an ABC pattern. So you find an ABC pattern, right? Let's assume that you find the ABC pattern on a 1 hour time frame and you look for market structure shift on 1 hour. So you have a shift in market structure right here. Now, once you have a shift in market structure, what you want to do is you want to mark out your auto block, extreme auto block, okay? And for me, for this strategy specifically, I use the first candle of the fair value gap as my auto block, okay? So I would mark out the first candle of the fair value gap, extreme fair value gap, okay? And I would wait for price to come back into my POI. But before that happens, once you have a market structure shift, you want to drop down. So I'm taking 1 hour as my higher time frame, okay? So 1 hour is my higher time frame. Once you have a shift in market structure, you want to drop down to 15 minute, and you want to look for this pattern right here. You want to look for A, B, C, okay? Or in simple words, you want to look for a break of structure after change of character. So you have a change of character or market structure shift here. And once you have change of market structure shift, you want to look for break of structure before entry. So you see we have change of character right here. And then we have a pullback, and then we have another lower low. So this is a break of structure before price went into our POI. After that, I want the price to go back into our POI. So when we have 1 hour market structure shift, you want to drop down to 15 minutes. You want to mark out the last candle of the fair value gap. Oh, sorry, first candle of the fair value gap on 15 minute. You only have to look for shift in market structure on 1 hour. Once you have shift in market structure, you just go to 15 minute, you mark out the extreme fair value gap, or no, not fair value gap, auto block to make it even more precise, okay? And after that, when you have market structure shift, you look for break of structure. Now what it does, it creates this liquidity, okay? So anyone who short it here, they would trail their stop loss here, okay? They would trail their stop loss right here above this high, okay? And when price goes back into your POI, now what you can do here is you can directly enter, which is basically a risk entry. Or what you can do is you could drop down to 1 minute now So you have 15-minute POI right here. When price goes here, you drop down to 1 minute. You look for shift in market structure and you take your entry and make sure to put your stop right here just to be on the safe side. You can put it above the 1 minute auto block too, but it is risky. Just put it up there. And simply that you would get your confirmation entry. And this alone increases the win rate of ABC trading strategy. Okay. So you must find this sort of setup. Now here's another setup that you can look for. It's not going to happen all the time, but it is worth it. Okay. So let's assume that we have a shift in market structure on 1 hour. You have your POI marked down on 15-minute, and now you're waiting for price to go back into your POI, and you are looking to take confirmation entry. Now, once you have this pattern, so you have break of structure, right? What I want to see sometimes to make it even more strong, right? Let me remove this. I want to see something like this. Oops, my bad. There you go. So now what we have here is a pool of liquidity, and this pattern is very, very strong, guys. So what you have is a market structure shift plus break of structure. And after that, before price goes back into your POI, it creates a turtle soup pattern, or ABC, okay? ABC on a smaller time frame. So you have your POI marked out here on 15-minute. And you have a break of structure on 15-minute. Now you're waiting for a price to go back into your POI. And before that happens, before price goes into your POI, it goes up, induces all the sellers. So it's going to force a lot of sellers to sell here. So this is going to be inducement. And after that, when price goes into your POI, guys, that is like an A+ entry model for you. Okay. Now, when that happens, you can either enter directly or you can look for confirmation entry. Now, what you can do is you can also, on a high time frame, like on 1 hour, you could have marked another POI. It could be any other like PD area. It could be auto block. It could be fair value gap. Okay, it could be a breaker block, and when price comes here, you can then look for the setup. So when you add a lot of confluences like this, there's no way that you're going to lose this trade. Well, of course, there are no guarantees, but you are just simply increasing the chances of that trade being a winner. And all the market needs from you is patience. You need to be patient enough to find these patterns, guys. It's going to take some time. It's going to need a lot of practicing. But this is all you need to become profitable. The reason why I teach these strategies again and again and again, even though they are sometimes repetitive, is because I want you guys to understand this model very, very clearly. Okay, so I'm going to show you a live trade that I took today in the end of before the video ends. Okay, so make sure you stick till the end. So let's repeat this again, and then so this thing right here is not mandatory. Okay, of course, if you mark out the higher time frame POI and the C leg goes into your POI and then you look for the setup, it works as well, even better. But we are keeping things simple. So you have A, B, C on 1 hour. You have a shift in market structure on 1 hour below the range, which is the A leg high. After that, you have a break of structure before even price comes to your entry zone. Before price comes to your entry zone, you get a break of structure, creating this some sort of liquidity. Okay, and of course, this step is not mandatory. Okay, you can simply just look for this. Price comes here, you look for confirmation entry, look for a shift in market structure on 1 minute with displacement and during kill zone hours. Your entry must be during kill zone hours. Okay. And or to make it even more A+, oops, sorry, my bad, you look for something like that. Really simple, guys. So let me give you guys a couple of examples and then I'll end the video. Right, so now I'm in the replay mode, and of course this is cherry picked, okay, but I had to show you an example. Okay, so here you go. So I'm looking at Euro USD on a 1 hour time frame, and as you can see, we have a beautiful ABC pattern. We have the A leg, right? We have the B leg, and then we have the C leg. This candle wicks out above the A leg high. Now once that happens, you drop down. Okay, you don't want to drop down now. You want to look for a shift in market structure. So this could be a shift in market structure, and I consider bodies. So right now you can see the body closed just below this low. So that is my change of character. Now you drop down to 15-minute time frame, and you mark out your extreme POI, which is the first candle of the fair value gap. So this right here is fair value gap. This is the first candle. So now what I want is a break of structure, and that happens right here. Okay, perfect. Now see, we have this liquidity level or equal highs. Equal highs are not necessary, but we have a lower low, lower high. So this is liquidity. So now simply we're gonna sit back and wait for price to come back into our POI. And right here you can see we have a tap, and look at this rejection, guys. Now you could have took a risk entry, entered directly off this level, right? Or what you could do is you can drop down to 1 minute and look for a shift in market structure once again. So for me, this is market structure shift. You can call this as a market structure shift as well. Personally, I like to trade the fractals. I would consider this as a shift in market structure as well. Now, what you can do here now, so this right here is the first candle of the fair value gap, but that is way too extreme, and I don't like that, okay? Over here, what we have is a breaker block with fair value gap. Now that is a strong entry pattern. So the one downside of confirmation entry is that sometimes you're gonna miss entries, okay? Because there's fair value gap here, there's fair value gap right here, and there's a breaker block right here. So in order for me to not miss the trade, what I would do is take my entry from the breaker block, and do you see this fair value gap? I would put my stop just above this around here, and I would just, because I'm sure sometimes price would just never reach this level. That is way too extreme, guys. But it can happen, there are no guarantees, but that is how I would personally take the entry from here. And I would simply target the closest hanging fruit, which is right here. So price hits the breaker block, fills in this fair value gap, and look at the entry timing. That is 9:30. Perfect timing, okay? And look at what happens. Price hits our take profit. If we took our risk entry, that would have been even better. So let's see where this price goes. So it goes ahead and takes out this liquidity level, which was just right here. So that would have given you 5.19 risk to reward trade, guys. It's really that simple. But if you took your trade from this level and you put your stop above the order block or right here, doesn't really matter. If you put your stop right above the high here, you would have gotten 4.1. And if you put your stop right there, do you see this? 10 risk reward trade, guys. And of course, you are not just going to hold this trade till it reaches the 10-hour. You would be taking partials along the way. For example, personally, I would take one partial right here. Okay, so price hits our entry zone, and when this level broke once again, I would take partial, move my stop to break even, partial once again, and my final TP here. So generally, you should have three partials. Okay, two partials and one final TP. That is simple, guys. Simple as it can get. Go back test it. Don't ask me if it works or not. And it's gonna require a lot of practicing. I teach this thing in more detail in my mentorship. Actually, a course. The videos are already made. It is only $97, guys, but it's not necessary. I'm gonna teach everything on YouTube that is necessary to become profitable. But if you want to learn more, you can always get the course, and we have a beautiful community of around 500 people now, and we are active. Anyways, you see how this beautifully played out, right? So now let me show you a live trade that I took using the exact same technique. I took my entry. I followed, like, I took the trade on 1 minute time frame. I'm going to show you how it played out.
So it's clear.